Hey everyone, happy Friday and welcome to Trader Tales. This week, I have David Ryan joining me. He's three-time U.S. investing champion, also a former portfolio manager at O'Neill & Company, worked directly with IBD founder Bill O'Neill, and David also has decades of hedge fund and mutual fund management experience. David, it's always great to see you. Thank you for joining me.
Well, thanks for having me on.
Yeah. And an interesting day to have you on because it seems like we've been getting a lot of mixed messages in the market. So looking forward to getting your expert analysis on where we are, but we've got a lot to cover. We want to go over your weekend routine, how you screen, how you also look at normal versus abnormal price action, and of course, breaking down the market trading range, which you've been all over as of late, especially, but even with the bear market and what we've been seeing there, it's always been great to get your guidance with that. So what do you say? Let's kick it off. Let's dig in. Okay. So first, let's talk about your weekend routine. You've shared with us previously on IBD Live how you're going through MarketSmith to uncover where that leadership is and to get some clues, some tells of overall market health, spotting sector rotation. So walk us through what your weekend routine looks like.
Okay, well, it actually, I really don't look at anything on a Saturday, just because I got to take a break after 5 days of the market. I need some break. But then it actually starts on Sunday, and we go to the church in the morning on Sunday, and that's where I get back to what I believe keeps me sane in the market and gets my priorities straight. And so, but then on the way home from church, we actually drive about 50 minutes to get there. On the way home from church, my wife drives, and I take my iPad, which is then connected to my phone, and I actually start going through markets through MarketSmith right at that point. And the great thing is that I can, in 50 minutes on the ride home, I can go through hundreds of charts because I'm looking at just a very specific spot on the chart. I'm looking at the action of the stock, what it's done in the last the last month, and then also quickly looking at what it's done in the last year. And when I do that, most of the time I'm going through, I kind of go back and forth. I look at weekly charts, and then I go zero into the daily charts, and go back and forth between those two. Now, the first screen I go through, and if I should just go to
screen share,
MarketSmith, yeah.
Sure.
Okay, so I'm on MarketSmith right now.
We're live.
So what I do is I go down, and I actually have favorites over, and I've put these different lists into a favorites category. And the first thing I do is I go through the MarketSmith 250, because that's a list that has really, I guess it's already been pre-screened for me to show me the best stocks and what are the best stocks in the market on this. And then the way I sort it by those stocks that are in the strongest groups. And I know Chris just said this on IBD Live, but I've been doing this, and I guess even when I started at William O'Neill & Company in the 1980s, that they always presented their stocks, the strongest stocks within the strongest groups. They would go in group order, and that's the same way that I do. So, and then I go through these 250 stocks. I guess it gets up to 300.
Yeah.
At times. And again, through industry group, the strongest industry group first, and then I go through that. What I'm doing, and for some reason my program is stuck, so I actually doesn't look like I can bring up where's my 250?
Well,
yeah.
as it's thinking there, I just want to
Yeah.
note how you mentioned you have your iPad routine that you're going through. And so you're looking at 4 charts at a time.
Yes.
And we have a demo of that you did on IBD Live. So for our viewers who are watching this, I'm going to put the link to that demo video after we're done here in the description of the YouTube version of this video, so you can check that out and review it for yourself. Another thing before we get back to you, if I may, you said you're looking for something very specific. And is that something that's very specific is stocks that have had a strong prior move and then are tightening up in a nice orderly fashion? Is that the very specific setup that you're looking for, or what?
Yeah. And see, so let's just use on holdings for an example. You know, if I'm looking at a weekly chart, then I'm zeroing in on what is happening in the you know, I want to see a prior uptrend, and that's what this stock has. And then I want to see some the stock consolidation after the move that it's had. And so so the stock had a nice move up. It's gotten a little sloppy up in here where it was trying to break out too early. Then there was an analyst downgrade. Then the stock came back. But here you go again, where the stock is tightening up.
Right.
And I set my add point or my stop point right as it's coming through this downtrend line. And today the stock has popped up through that. And look, you're getting some nice volume on this. The other thing I like to look for is what's happened while the stock has gone through this consolidation. And you can see down at the bottom, really, it had very, very light volume. It had one day of big volume, or where it was above average daily volume. But if I zero in on that even closer, I'll see that that stock traded lower and actually closed above the mid-range of its price action for the day. So it's keying off of. I don't want to get the I'm not trying to call the bottom. And I think one of the questions that somebody asked when you took a poll on IBD Live earlier this week, they asked, how did you first spot on holdings? Yeah. Well, the first way I spotted it is I saw this price action going on here. I'm not trying to get the bottom. Trying to find the bottom, I don't know exactly. I mean, it's really only guessing. What you want to see is the first move up. And you can see the first move up, 4 of those 5 weeks off the bottom was on increased volume. Then look what happened. The volume came off during those weeks where the stock was just drifting back. This is where I first picked up on it. I also picked up on it and I started looking at shoes. I just walk around. I mean, when I'm walking, when I'm going to play tennis, I'm seeing what people are wearing. And I see that these on-cloud shoes are starting to show up, and I've asked people and they seem to really enjoy them. So that's how I first picked that stock up. And then, so as the stock was drifting off, I actually started buying a position. And so I had a decent position before it really gapped up on earnings. So I got off to a very good start on that. But that's sort of the process I'm looking at when I'm looking at I'm looking for stocks that I want to put on a watch list for the week. And after I find a stock that I like, I go over here and you'll see this little flag that's next to the name of the stock. If you click on that little flag, then that will put it into I forget what it's called.
A flagged folder.
Flagged stocks. Yeah. And so then after I go through my hundreds of stocks, I go through 250 here, I go through a data monitor, I run a few screens, then I actually have it says flagged symbols. And so I can click on that, and right here you'll see 33 items came up. That's what I flagged for this week. And so then one of the last things I do on a Sunday is I start going through each one of those stocks. And now this one, I'm going to take off of there. I'm going to unflag it because this stock is, I mean, this has been a wild stock anyway. It's been back and forth. I haven't bought it. I might have been in it months ago, but Southern Copper is another one. This is also kind of wide and loose, but Harrow Health, this is one I actually bought. It was thin, and it broke out of this nice base, but you can see how well this thing consolidated. And I bought it on the breakout, but it moved so quickly. I only got a small position. I ended up selling it. My daughter actually bought it. And Kathleen is still riding this stock and having a nice move. But again, what I'm looking for, if I go to the weekly, you'll see this better, this consolidation. I didn't get this move here coming out of a fairly nice base, but I saw it set up here, and that's where I got it. If you don't get the first move up, there's always 2 and 3. And if a stock's going to make a great move, it'll make 4 or 5 moves during a year, and usually you can get onto one of those. So anyway, I've got my list. I've got my 30 stocks. I go through and I even narrow these down to look and then come up with a list. And what I do with that list is then I have one of my platforms is Thinkorswim. And so I have a watch list that I put these 30 stocks or how many stocks I have in the week. I put it on a watch list to watch it. The other thing I do is I put alerts on. If a stock to me is very, very close to breaking out, then what I'll do is I'll put an alert on MarketSmith, and then I might also put it on Thinkorswim. So either one of those will go up. I mean, here's one that I had. You can see that I had that I put on, I think, this weekend. And it actually triggered just today. I haven't bought it because I don't know the company that well. But here's another one where, look, it had a nice move up. It had a nice consolidation. And if we go to the weekly, you'll see that it went sideways for almost 3 full weeks. I'd have to count how many, but look how strong that uptrend has been.
Very. And the volume
was very, very good on a weekly basis. Even, most of the large spikes here are good. So that's how I set my alerts. I try to, when I go through in a week, I try to look at as many stocks as I possibly can. I do run a couple of screens.
What would you say, sorry if I may, David, what would you say are your top 3 or 4 screening parameters that are must-haves for you? Or do you use pre-made screens in MarketSmith?
I've got a bunch of screens after using this MarketSmith for so many years that I've got a ton of different screens. But some of the most general ones, an 85-85 screen. I have one that has tight weekly closes. Is
the 85-85 RS and comp?
Yes. RS and EPS.
RS and EPS. Got it.
I have one that I've had this is called established downtrend. I like to look for stocks that have topped that could be possible good short sales. But you don't have to. I mean, I've seen this for decades now. Everybody tries to come up with the absolute perfect screen. There is no perfect screens because if you try to write it, you'll be kicking out of stocks. A lot of mine are fairly general, and so it's hard to write the perfect screen that will come up with 10 stocks you have to own and that you can stay with for the next year.
So there's no secret sauce to screening in terms of the parameters. It's really, then it comes down to the technicals at that point. And of course, fundamentals are important to you too. But like you said, there's a look to a chart that you're looking for. And question for you would be, when you get an alert that's triggered like this one here, then what is your process after an alert is triggered? Then you go to an intraday time frame. Do you check and see what the broad market is doing? How do you go about making that game time decision after an alert is triggered?
Yeah, and I do go down into intraday charts. And as someone asked a question about intraday charts act very, very, very similarly to day charts and weekly charts. The same patterns exist over and over again. And so even on this, like on holdings, I didn't add to it on this first 5-minute, 10-minute bar. I usually make most of my mistakes if I buy or I react too early to the first 5, 10, 15 minutes of trading. And I like to see them settle down. And I mean, even on this one, I mean, look at this consolidation. I did add to it just before the show started because my alert, I had a buy stop on this because I didn't know if it was going to happen during the show or after the show or before. So anyway, I put a buy stop on it and it triggered right there. But you can see that's a nice little consolidation as the stock was kind of just resting after a really nice gap up on the morning. But that I do go from, I like to see all the time frames, and if the stock has been around for a while, I go monthly, weekly, daily, and then even down into the intraday 60-minute charts. I look a lot. And you can see this stock has been consolidating fairly nicely, doing this. So these patterns, they just repeat themselves over and over again. The other part of my daily is my Sunday routine is I actually print out, I come up, bring up a Spiders chart, and I actually print this out and I start marking it up every week. So it makes me focus on what the general market's doing. I highlight volume spikes. What are the biggest volume spikes doing? And even here you're seeing, we got 3 days in a row of some pretty good volume to the downside. Now today we're jumping back up again. And what did we do during this whole, during the last 4 weeks? Very, very light volume as we're going through here. I also print out a few charts on some indicators that I keep an eye on, and then I put them in a notebook. And I got a notebook of all this of the different charts on the market over the this goes back I guess this is the last couple of years, and I put it into a notebook so I can go back and study what was I thinking at that time when the market was moving, what was this stock doing, and so it's just something that helps me focus on what the general market's doing. What are some of the indicators that I look at, and a lot of them are just very basic advanced decline type of indicators.
Mm-hmm. Also, I know before you've mentioned the fear greed index. Is that, I don't know if you print it, but I know you look at it.
Yeah, that's just one other additional thing that I look at. But a lot of them are some of the things that you can get on MarketSmith, some of the advanced decline lines. So that's and then the other thing I do is like on this if there's a company that I don't know who they are or what they do, then what I might do is what I always do is I go up and I go to their website. So here's Decker's Outdoor, which seems to be, after a couple bad days, it's come right back up and seems to be forming a nice little base. It's only a couple weeks old. And I go to their website. I listen to conference calls. I try to get to know the company well. I try to get that, what is that hook? What is that thing that will keep me in the stock even when they're having a bad week or so? Then,
sorry, go ahead.
And so I want the fundamental story because I don't day trade. Uh, Occasionally swing
Unless
trade.
you're forced to, maybe. If it
Well, yes. Well, if I buy a stock, I expect that stock to go up immediately. And if it doesn't, or it turns down very quickly, then I could be out that same day or the next day or very soon. But when I buy a stock and it's coming out of a nice base, it has all the fundamentals. I'd love to see that work out for months and months and months, if not something over a year. But I don't like to get in and out, in and out and out. Some people like that. That's some people's style. But I like to get to know a company and go for a much longer term run.
So then when it comes to on, and like you said, you're a tennis player, David. So do you have some on running shoes yet for
I do not. I do not. I have a very thin and narrow foot, and so I haven't actually tried them, so I'm not sure. But
I say this not having tried them on myself, but
right. And so I have a very narrow foot. So there's only certain brands that I can wear. Right now, I'm wearing some Wilson tennis shoes because they're very narrow. They fit very nicely. So
have to see.
But I usually do go ahead and own, or I have already owned, the products of the stocks that I buy.
Right. So it seems like it's only a matter of time. So with how this stock is acting here, this is an add-on spot for you. You already have a position. Yeah. How much percentage-wise makes sense to add here with where it's trading in relation to those shorter term moving averages?
I added like about a 25% to the position. It's not that long of a base, but it's showing some very good strength because when the market has come off, this has held very, very nicely. So I like longer bases. It just in terms of when I'm adding on, if it can go sideways for 4 to 6 weeks, that's better than a 2-week base where it then continues. I mean, their specialty is running shoes, and so it's like a runner running uphill. You know, they get up a super steep hill and they have to stop halfway to catch their breath and then go on. I just like longer bases to add to a position.
So with this add-on buy point, would you be using a percentage stop, a recent low, a moving average?
It would probably be if this reversed and went under this trend line, and which is also kind of corresponding with that 21-day moving average, right, then I would at least sell out what I just bought, and then consider how bad the reversal was, what kind of volume was there news. Their earnings are coming up in 11 days, so that might have some influence. So I take a lot of different things into consideration. But if it breaks out of what I feel is a decent base and it comes back into it, I'm going to be fairly quick to sell that position down. But the good thing about having something that has tightened up and has a nice little trading range is that your downside of where, if you buy it here and it goes, it does something like this, it's not that big of a move down.
Right, exactly. So you're protected in that way. Well, I'm sure as earnings approach, we'll get your updated thoughts on how you're going to be handling this one heading into the report. Now, how about we move on to talking about the concept of normal versus abnormal price action. And it seems like a couple of things to take into consideration is the stock's overall trend, where it closes, how volume is playing into that, but would love your thoughts on how might we become better at reading a stock's price and volume action and knowing what is normal or abnormal.
Yeah. Okay. Yeah. First of all, normal price action versus abnormal is really found. You're really talking about the price and volume action of an individual stock. And if I was going to if you were only going to give me 2 items to look on a chart, I would just be looking at price and volume. I would throw out all the moving averages. I would throw out any other indication. Price and volume tells me 90% of what I need to know of the direction of a stock. Yes, I want fundamentals. I love to have fundamentals coming along with me. That's part of CAN-SLIM. But if you're going to narrow it down, price and volume is the most important thing that I look at. And what am I looking for? So I have these points. So I have an extreme focus on the price and volume, and I'm constantly looking for change. So when a stock is, let's say the stock has been going sideways, and this I'm going back to Peloton because I can show you, the move up and then the move down.
Right.
And Peloton was in a base and then started moving out, and you'll see that, I mean, even farther way back here, the stock had a very, very tight action and then moved up on some very big volume. And after it makes a nice move, what kind of volume do you have on the downside? Well, you always get a couple of days that might not be that good in terms of the volume picks up and the stock is down. But I'm always comparing to what is this volume compared to that volume. 53 million on the upside versus 53 million versus maybe 19 million, 20 million on the downside. So this volume was much smaller than that bigger volume. So then the stock moves up, and it's up in a nice uptrend, maybe gets ahead of itself. But look at the volume again is good. You got a lot of volume days on the upside, above average daily volume. That's a good sign. But then it goes sideways again, tries to break out, goes sideways again. But what is happening to the volume during these consolidations? And you can see, during this period in here, it didn't trade much volume at all. Look at the downside volume during this period. I mean, it looks like it couldn't trade average daily or half of average daily volume on the downside while this stock was consolidating. Even though it dropped from 73 to 62.50, it did it on really not much volume at all.
And so that means, if I may just jump in, that institutions are not getting out. The institutions are staying with their positions.
Right. They're not selling. You're not seeing any of their large footprints of volume within that. And so there's no selling. You actually got a few really big days of up volume. So then the stock comes out of the consolidation, and look at the volume increase on this. So you had 1, 2, 3, 4, 5, really it was 6 days in a row. 5 of those 6 days were on huge volume, much bigger than the average daily volume, which is that red line. So then the stock moves up, gets a little volatile. Now, I'm not sure what happened on this day where it traded 87 million. It actually looked at 2 days in a row. It traded higher and closed lower, traded higher, closed lower. And then it was down one more day, kind of righted itself, and then took off again. So don't let one day completely throw you out of a stock. Right. Because there might have been some news, there might have been a secondary. I'm not exactly sure.
And it also held the 21 day.
During that whole period, which is a good sign. The other thing that you have to know what is normal, or I don't know if you say normal versus abnormal, but I would say good price action versus bad price action. A good price action is when the stock is moving up, it's moving up on big volume, and it does it quickly. And you'll see that what happened here is this stock would move up quickly, and then it would go sideways and not come off much. And then it had this move up again that was fairly fast, and then it drifts off and goes sideways. And that is what happens in a good stock. The moves to the upside are fast. The moves to the downside are slow and on lighter volume. Move up fast, down slow. And that's pattern you'll see not only on a daily, weekly, or monthly chart, you see it on the intraday charts. And so keep that in mind. That is very, very important, because when you get up to the top of this stock up here, the entire picture changes. The moves are now down fast. The rallies are slow. The moves down are fast. The rallies, it can't get anywhere. It comes off quickly, and then it can't rally down quickly. And so it's from the left side of the uptrend versus the right side of an downtrend. This is 180 degrees different from these two sides. And if
it really almost does look like a mirror image right there.
Oh,
yeah, incredible.
Exactly. But it's a mirror image on what is happening here. Because, I mean, even if you just look at the volume, look at all the blue down here as this stock is moving on an uptrend. Mm-hmm. What happened to the blue at the top? It's like disappeared. Now it's mostly red, and most of the big spikes are red spikes. So 180 degrees. And the way you just study this is just look back, find a few stocks that have had great moves up and then down, and study the left side of the chart on the up move, study the downside. And I've spent hours and hours and hours just watching these things and seeing how they react and what the volume is, what the price action is. But so fast moves up, slow drifting, sideways price, and then it all changes. So larger volume on the upside, smaller volume on the downside. Then let's see. Oh, and one other thing is that a lot of people think, well, you know, my stock's in an uptrend, but the volume's is not huge. It doesn't have to be huge every single day. The most important times when the volume should be big is when the stock is starting to move out of a consolidation. Once it gets up and it's in this nice steady uptrend, the volume can actually be below average daily volume. But then you do want to see what happens when you do get big spikes to the downside. Right. So that's one thing. You don't have to worry about the volume. It's almost like a rocket ship getting off the launching pad. It needs a huge amount of thrust to get that thing off the launching pad and then up through the atmosphere. But once it gets into space, it can go a long way without using really any fuel at all. And it's sort of the same thing that happens on an individual stock. Once it gets up and going and it's in a nice uptrend, it can just keep on going on not a whole lot of volume. Right. So one other thing, this is something, it can be very, very simple, but it works really well, is in a really good, strong uptrend, you rarely get, and in most cases, you never get more than 2 weeks down in a row. And I'm saying 2 weeks where you make a lower low. If you looked at this spot this week down here, that week was actually contained between the high and the low of the prior week. So I don't even count that. Then the next week, it traded down, but I would only count that as the first week down because that's the first lower low. Mm-hmm. It actually traded mid-range, which is good. Then you kept on going. You had 1 week down here. It kept on going. You had 1 week down here. It kept on going. This was the first sign that something was wrong. You had 2 lower lows. That first one, that's your first lower low, and that's your second lower low. And so, and it had one final run, but if you almost adopt that, and because I started thinking, why doesn't this happen? Well, it's probably because you've got institutions that have a lot of stock and they're not going to sell or consistently sell for 3 weeks in a row unless they really think the position is, or the stock is finished and we're getting closer to the top. So if you almost buy a stock that's coming out of a base, really nice, it's got all the earnings, everything, and it starts taking off, sometimes you don't have to even worry about it until it has 2 weeks down in a row. And I'm not talking 2 little tiny weeks where it barely goes down. I'm talking 2 fairly large weeks and the volume picks up. And that happened to, well, the volume really didn't pick up much. And that's also a clue. But that's one other rule that I found. The other one, I mean, you can even take this to even farther, but it doesn't work as well, is you rarely get 3 days down in a row that are on big volume that make lower lows. So, but if you step back and you look at two weeks, then that would work. The other thing is, as you're getting towards the end of a move, then sometimes you get this type of an acceleration. And the stock is going up at a certain angle, and then it just kind of starts blowing itself out.
And it really did that last attempt at a breakout.
Yeah, I mean, it did it here, and then you really had one final move, and then it was all over. The other thing that is, so when you're in a stock and it's having a nice up move, and it does something, this is what I would say is abnormal to what it's been doing, because you're always looking for change. This is abnormal price action where it goes up and it's going up faster than it ever had gone up in the last 6 months. That's when you might be getting close to at least an intermediate top, which it did. And then it really had a final blowout here. The other thing you're looking for is volatility. So when the volatility really picks up, and you can see that happening at the top, and that volatility picks up and you get a lot more attention to the stock. And everybody's talking about it because, the stock's gone a long way. Everybody wants to own a winner. That's when when the volatility picks up in a stock and it's had a great move, sometimes I just start selling down the position because that's just a sign that it's getting late.
Yeah, that makes a lot of sense.
The last few things, abnormal price action, abnormal or bad price action is when it starts breaking moving averages like it did here. Now here, yes, it gapped down and maybe you had sold some into this excessive move. But anyway, this is where it broke it and didn't get back above it and just stayed below it. And look how what used to be a support for the stock all the way up turns into resistance over here. So moving average or break. And so these are the different things that you want to be looking for in good price action versus bad price action. And again, if you just study from here on down on this example, you'll be able to see this. And the more examples you see of this, the better you're going to get to know where you are in the price action of the individual stock.
Very insightful, David. Now, unfortunately, we've got 4 minutes to get your take on current market conditions.
Current market conditions. Okay.
So if we could go there, let's go to the S&P and reset to today.
Yep.
We've seen a lot of back and forth and a lot of mixed messages underneath the surface too. But what levels are you watching right now? Are you still seeing that 418, 420 as the high end of the range, or could we rally up to that 430 area?
We could probably get to 430, but I like to see what happens. And we got back above this 418 level about on Monday, but then reversed and came down very hard. And now you're moving back up, but the volume really isn't very good.
Yeah.
I mean, I can see it's down 36%. We could get up into this range, but I think that the other side of this is this is probably the lower part of the range, down in that high 370s, 380 area. And the reason why I keep this, there's a number of things, because this is very much like the 70s. You had a trading range from 1966 to 1982. The market, the Dow went back and forth between about 1,000 on the high and 700 or 650 on the low. And you had inflation, you had higher interest rates, you had, I guess you had a Vietnam War going on. So you have a lot of parallels to what's going on today. The other thing that you have to keep in mind is that here's another period, 2000 through 2013, where this market was just going sideways. But anytime you have excess moves, and we had a great move from 2013 to the 2021, and this was so excessive with all the money coming into the market. You're going to have to pay the price for such a great market in a lot of sideways back and forth action. And that's where your stock selection has to be right on, and you use less money. Because, the other thing too is when you can get interest, without taking much risk, a 5% return on a 6-month T-bill or 1 year, or you can get high rates in CDs, that's competing for the money that goes into the market. And so it's no longer, this is the only game in town. There are a lot of other things where you can get a good return with less risk and not have to go through all this back and forth action. So that's why I think we're just going to be locked into a trading range, at least through the end of this year.
So more aggressive if we get above 418, and scale back if we break the 50-day?
I would use it. I would be just the opposite. We get above 418, you have to start taking profits and not looking, unless you start getting a rash of new stocks and new names going. I think you get above that 418, 420 area, and you got to be looking for the exit, not the entry, because it's just, we've got these factors that are overhanging this market and the economy. That's going to keep a lid on it. If we pull back and go way down, I would look for the strongest stocks that have resisted that downtrend and look for those to turn. So it's kind of buy weakness, sell strength in this type of a trading environment.
Right. Yeah. Definitely don't want to chase extended stocks or breakouts. It seems like that's the exact time that they don't work out. So we'll have to see what the market throws at us next. But David, always enlightening to speak with you. Thank you so much for your time.
Okay. Thank you. Have a good weekend.
Yeah, you too. And if you want more David, make sure you check out IBD Live every Tuesday. So we'll see you there. Have a great weekend, everyone, and see you next time on Trader Tales. On the 19th of May, I'm going to be speaking with Charles Harris. So make sure to tune back in then. We'll see you next time.